Apologies. I believe it unmuted you. Apologies. We had some technical issues. Robert, please continue now. Things should be all right.
Yeah, I think I just had to agree. Yeah. Okay.
Apologies. We just started the recording of this webinar, and apparently there's a need
GDPR
to
is
accept
everywhere.
this.
Okay. So in order to kick this off, we want to walk through the several regions around the globe, from Asia to Africa, Middle East, Europe, and then Latin America, with also some glimpses on the US, which, as you know, currently is a bit disconnected from all these debates due to the presidential elections and the standstill in the Congress. And for that reason, I would like to hand over to Oriol to give us the perspective from Asia on how the regulatory engagement happens there, what are the key trends and developments, maybe with a focus area, and I think you picked Hong Kong to give a bit of a loop, and then we go through the regions to give a better idea, and then start a discussion about this. And if anybody has any questions, then please raise your arms and we'll try to onboard the questions at the end of the webinar so that everybody gets a chance to talk. So Oriol, over to you.
Okay, thank you very much, Robert, for the introduction, and thank you all for attending this event. As Robert mentioned before, this is our official kickoff, the official kickoff of our partnership between the Global Impact Fintech Forum and Blockchain for Europe. We actually just signed our memorandum of understanding, and we are looking forward to collaborating together now and in the future. So,
Oriol?
Yes.
I think your camera is turned off. Sorry.
Okay.
Because all of the cameras were turned off and we were on mute. Okay, here. Okay.
Thank you, Mariano. Well, yes, I was saying that this is the kickoff of our partnership with the Blockchain for Europe. And well, without further ado, following what Robert mentioned before, I'm trying to bring in some ideas, some thoughts about how digital assets are regulated in Asia. And more specifically, I'm covering East Asia and Southeast Asia. I will cover later, I'm sure, Qatar and the Middle East, but I'm focusing more on China, Hong Kong, Japan, Korea. Of course, it's going to be impossible to go into much detail within a few minutes, right? But the idea is just to provide some initial thoughts. In the second round of this panel, I will talk a bit more about use cases, etc. But when it comes now as some introductory ideas, there are several crypto hubs in East Asia. As Robert said before, I'm going to focus a bit more on Hong Kong, but Singapore is also a crypto hub. It has been so for many years. And then there are other countries that have a less crypto-friendly approach, to put it some way. For example, China, as you know, banned cryptocurrencies back in 2021, even though they've been intensively working on, for example, CBDCs. The digital yuan is actually one of the most, not yet fully launched, but still advanced CBDCs in the world. So it is not that mainland China has not been working on this area. They've been doing work on blockchain, CBDCs, but as you know, digital assets are banned in mainland China. So as you can see in East Asia, I would say one of the key ideas is that there is a diversity. And we find jurisdictions like Hong Kong and Singapore, which are much more crypto-friendly, even South Korea and Japan, others that are in between, or others like China, which decided to ban it. In Singapore, for example, cryptocurrencies are regulated under the Payment Services Act, and they are recognized as digital payment tokens. But I prefer to focus right now on Hong Kong, as Robert said before. As you know, Hong Kong is already, but it is becoming like even more a Web3 hub. This is something that the Hong Kong government has been trying to do, especially since November 2022, I would say. I mean, as you know, in Hong Kong, many crypto exchanges were born there, etc. But then the regulations became a bit more restrictive, and it was back in 2022 when it was agreed on the idea of trying to become this Web3 hub, one of the world's most important ones. And the Hong Kong government and other stakeholders have been working towards that since pretty much then. We are seeing that through the newer regulations being approved, through events being celebrated there, etc. And it's, as I said before, quite difficult to summarize everything shortly, because we are seeing like many new developments like on a daily basis, pretty much. In Hong Kong, cryptocurrencies are considered a form of virtual asset that is generally categorized either as security token or non-security tokens, like, for example, utility tokens. And starting from the 1st of June from last year, 2023, non-security tokens are regulated by the SFC in Hong Kong, the Securities and Futures Commission, to the extent that the party proposes to operate a VATP in Hong Kong or offer VATP services into Hong Kong. I think it's also important to mention that the main regulators in Hong Kong when it comes to cryptos are the SFC, Securities and Futures Commission, and the Hong Kong Monetary Authority, which is Hong Kong's de facto central bank, the HKMA. Hong Kong is becoming one of the most attractive crypto destinations globally, and well, despite scandals like the famous JPEX one back in September 2023, the intention to become a Web3 hub is still there, and it is progressing and advancing. One thing that was changed as well a couple of years ago was the idea of who was allowed to participate in digital assets or crypto market, because it was quite restricted. The regulations were quite restrictive towards retail investors, but this was gradually changed to the point that the things that are now more restricted for retail investors are those investment products that are considered to be far too complex to be understood by someone who's not a professional when it comes to trading. So, for example, investing in an ETF, etc., could be considered something far too complex and therefore restricted to some extent to retail investors. But other than that, the market was quite open, I would say, a couple of years ago, even though we are still seeing many news, like, for example, the SFC's tokenization circular, and also just a couple of days ago, on the 12th of March, it was announced the creation of this regulatory sandbox for stable coins in Hong Kong as well. It was announced by the Hong Kong Monetary Authority. And this is when it comes to digital assets. But then, as I said before, we are seeing many news as well on the area of CBDCs. Actually, the HKMA is one of the central banks more involved in central bank digital currencies in the world, at least when it comes to the amount of projects, because, as you know, Hong Kong worked on testing the digital yuan for cross-border payments in Hong Kong. Hong Kong is also working on the electronic Hong Kong dollar. Hong Kong is also involved in wholesale CBDC projects like the M-Bridge project, which, as you know, involves several central banks, and the central banks of mainland China, Hong Kong, United Arab Emirates, and Thailand. And then there is as well Project Cela, for example, which involved the central bank of Hong Kong and Israel. So as you can see, there are like many different CBDC projects as well being studied, being analyzed in Hong Kong. So to conclude this part, I would say that in East Asia, we find many jurisdictions that are quite crypto-friendly. There is an intense crypto activity, digital assets activity, not just in Hong Kong, also in Singapore, South Korea, Japan, and Hong Kong is becoming a Web3 hub. And later on, I'm going to come back to crypto uses and percentages in my second intervention. But for now, I am here.
Thanks, Oriol. I think that was very helpful and very enlightening. So moving from Hong Kong, we go west. I would like to take a stop in Qatar and look over to Maha to give us an idea of what's going on in the region, and maybe enlighten us a bit on how does the rest of the world influence the region and how it's the other way around.
So thank you so much first for having me and for giving me an opportunity to cover the Middle East and the GCC. So in Qatar, back in October last year, Qatar Financial Centre Regulatory Authority, in cooperation with Qatar Central Bank, published the Digital Asset Framework Proposal. The Digital Asset Framework Proposal primarily looks into the industry best practice, which is very much heavily influenced by the Liechtenstein container model, focusing on the transfers of property of tokenized asset. So what makes Qatar a bit unique in its approach is that we are one of the jurisdictions that bans dealing with cryptocurrencies So the focus is primarily around real-world asset tokenization and unique use cases, in addition to focusing on investment tokens or security tokens within the financial institutions framework. So this came along with a number of rulebooks updates from Qatar Financial Centre Regulatory Authority that included the typical AML, companies regulations, etc. So this is still in draft form. We have successfully managed to process a good amount of interest from market participants providing input on how they would see the framework working, specifically when we do not have any crypto element, and dealing with the settlement of tokens. In addition to the digital asset framework that is being finalized as we speak, we have launched something that is called the Digital Asset Lab. The Digital Asset Lab is a unique opportunity for market participants, specifically within the region, to test tokenization frameworks and use cases. Some of the use cases we have are revolved around real estate tokenization, around green bonds, around carbon credits, and very interestingly also covering Islamic finance elements with the issuance of Sharia-compliant bonds or sukuks. So this is primarily where Qatar is coming from. Looking into the broader region, if we look into United Arab Emirates, we know that the United Arab Emirates has a very solid crypto-friendly regime, specifically with VARA. Then you have a very interesting approach with Bahrain, which has one of the most famous cryptocurrencies exchanges in the region called Rain. This is not a promotion, it's just facts. And then you have in Oman, they decided that trading cryptocurrencies could be seen as legal, but remains unregulated. The GCC is also pretty famous for mining activities because energy is rather affordable. If I would also just walk through other Arabic countries, I would say that the digital asset framework in the majority of other countries remains to be seen and regulated in the way that it deserves to be given the credit it deserves, so to say. Like in Lebanon, stable coins could be seen as a lifeline for a lot of people who are struggling to get their deposits from central banks. In Egypt, it's also prohibited, but they're looking into using cryptocurrency-related infrastructures for remittances. So yeah, this is pretty much it as a quick walkthrough.
Thanks a lot. That was very comprehensive and efficient. I like it. Moving from the Middle East, we're going now a bit further west and south to Ali in Kenya. Ali, please be so kind and give us an overview of what's happening on your home continent, because I know there's a lot going on, and it would be nice to get a flavor of an impression from somebody that is actually on the ground. I think we lost him, or you are muted, maybe, Ali?
I'm sorry. I was muted. Good morning, afternoon, or evening, whichever part of the world you are in. So first, before I go further, I would like to there's some breaking news, quite interesting. Today morning, it was just announced that South Africa is to license 60 crypto platforms by the end of March. That is interesting news because Africa has not really had, no African country has had a solid framework looking at digital assets or crypto for that matter. So this particular piece of news by the Financial Sector Conduct Authority of South Africa is welcome news because there's been quite a lot of uncertainty. So going back to the broader conversation around digital assets and crypto across Africa, I would just want to cover the 4 key fintech markets in Africa. That's Nigeria, South Africa, Egypt, and my home country, Kenya. As of as of first quarter of 2024, the status of digital asset policy and legislation across the continent, particularly the 4 countries that I've mentioned, is, I would say, pretty uncertain as it stands. Let's look at Nigeria to start with. Whilst Nigeria has shown increased interest in and activity in the digital asset space with a growing number of startups and investments in blockchain and cryptocurrencies, the Securities and Exchange Commission, which is the primary body looking at digital assets in Nigeria, and the central bank has continued to work on regulatory frameworks for digital assets, including proposals for licensing and supervision of crypto exchanges. However, the fact of the matter is regulatory clarity and consistency is needed as the government grapples with balancing innovation and investor protection. Nigeria is interesting. The largest economy in Africa. The authorities there blow hot and cold when it comes to digital assets and crypto. And the latest news coming out of Nigeria is not encouraging at all. We have 2 Binance executives that have been sort of detained by the Nigerian government for the last 2 weeks. And the Nigerian government is demanding, according to news reports, demanding the top 100 Binance users from Nigeria. And also asking for a $10 billion fine for undisclosed offenses. So that story, as we speak today, is still evolving. We hope, and we hope for the best for the 2 executives that have been detained. In South Africa, I've just mentioned the breaking news of 60 crypto exchanges having been licensed. We have seen continued growth in the adoption and use of digital assets in South Africa, with an ecosystem of startups and businesses that is growing. The regulatory environment has become more defined, with the Intergovernmental Fintech Working Group and the South African Reserve Bank working on frameworks to regulate crypto assets and related activities. Licensing requirements for crypto service providers and measures to combat money laundering and terrorism financing have been focal points for regulatory efforts. And I do believe that South Africa is making great progress in structuring and having a clear policy and regulatory framework for digital assets and cryptocurrencies. In my home country, Kenya, the fintech sector has continued to thrive with growing interest in blockchain and digital assets. The Central Bank of Kenya, however, has maintained an extremely cautious stance on cryptocurrencies, emphasizing consumer protection and risk management. In 2015, that is many years ago, that's 13 years ago, about 13 years ago, the Central Bank of Kenya issued advisory to all banks regulated by the Central Bank of Kenya on specifically and expressly telling banks not to do business or open accounts with anyone or any organization that is known to be dealing with digital assets or cryptocurrencies. As we stand today, that advisory note has not been cancelled. It still stands. In Egypt has remained conservative in its approach to digital assets and cryptocurrencies, with the Central Bank of Egypt maintaining its stance against their use as legal tender. While there may be interest in blockchain technology for various applications, regulatory clarity for digital assets remains limited. Authorities in Egypt have continued to express concerns about the potential risks associated with cryptocurrencies, including their use in illicit activities. So overall, while there may have been advancements in regulatory and policy frameworks and for digital assets in these countries as we stand today, challenges such as regulatory clarity, investor protection, and risk management are likely still being addressed as African countries navigate the evolving landscape of fintech and digital finance. Last, as a note, despite all that, central banks in Africa are starting to dabble with central bank digital currencies, CBDCs. A report says that 25 of 130 countries worldwide exploring CBDCs are in Africa. However, only one country in Africa, that is Nigeria, have actually successfully launched a CBDC, while others are cautiously progressing and evaluating. Ghana, South Africa, and Tunisia are currently piloting CBDCs. The Benin Republic's digital currency status was marked inactive, and Senegal's project was cancelled. My home country, Kenya, the Central Bank of Kenya issued what they called a discussion paper on digital currencies last year, ending the discussion paper with a note saying they don't believe that Kenya is ready to pursue a central bank digital currency project. With that, I hand it over back to you, Robert.
Thank you. That was very comprehensive, much appreciated. And we're moving to a next continent, a bit smaller one, with Peter hopefully giving us an idea of what the EU or Europe more broadly is doing on this matter, and hopefully excites everybody about this. Peter, over to you.
Well, thank you very much. And yes, it's not the EU more broadly, but I would say the EU more narrowly, because of course we only are part of the European continent, and there are important parts of the European continent that are not part of the EU, are no longer part of the EU, or are not yet part of the EU. I think that it's fair to say that if you look at crypto markets today, or recently, with daily trading volumes in excess of $100 billion daily from the last 3 to 4 weeks, most of this activity is not taking place in the EU. So most of the global crypto activity is not in the EU, but most of the crypto regulation and crypto policy probably is in the EU. We are always fairly early out of the block, often first out of the block when it comes to comprehensive regulation. Whether markets follow that or not often remains to be seen. We see at times a very elaborate regulatory framework, but no real market to follow it. Whether crypto will be the same or not remains to be seen. But so we do have a fairly elaborate legal framework for crypto assets, which is built on a dichotomy. And the dichotomy is that if an instrument is a financial instrument, it is regulated by traditional financial regulation, irrespective of the technology that is used. So if you are dealing in securities, financial instruments, that is governed by our regulation governing securities and financial instruments, irrespective of whether these securities are tokenized or not, operated on traditional venues or not, in whatever form they are. Now, so the traditional rules continue to apply to them. Whether it is always possible to operate traditional financial instruments in a crypto or blockchain environment is another question, because this has to do with rules governing market infrastructures, and there are or there can be problems with actually implementing traditional financial rules and regulations in a blockchain environment, and some rules actually prevent it. That is why a couple of years ago we introduced what's called the DLT pilot program, which is a pilot regime allowing for financial market infrastructures to operate distributed ledger-based infrastructures on a trial basis, so for certain asset classes and for limited amounts. This is a trial regime that is live, but is not yet activated, in the sense that we currently do not have yet any financial market infrastructure or service provider that is authorized, that has been authorized into this sandbox arrangement, if you want to call it that way. That is for traditional financial instruments. What is often what's often talked about more is, of course, the European Union's MiCA regime, the Market in Crypto Assets Regulation. And this is a regulation, European regulation, governing all crypto assets that are not financial instruments, that do not meet our definitions of either a security or a bond or a bank account or whatever, or a fund. So everything which is not financial instruments. Most crypto assets on the market do not meet the definition of a financial instrument in Europe. So most crypto assets on the market, and there are thousands and thousands of them, to the extent that they would be offered or transacted in the EU, would fall under the MiCA regime and not under our MiFID regime, because most of them are not financial instruments. And the MiCA regime covers really two big aspects of crypto regulation. One is the issuance of crypto assets. So these are rules for issuers, and we make a distinction between three kinds of crypto assets. The biggest category are what we call general crypto assets, which are crypto assets that represent no claim on anything or anyone, and that have no backing by anything. Those are general crypto assets, and most crypto assets which we see in the market would fall in that bucket. They represent a claim on nothing and no one. They have no stability mechanism. They have no reserves. They have nothing. They're just sui generis crypto assets. And now we have stablecoins. That we have two different categories of stablecoins, which are backed and which reference a single official currency of any country in the world. We call them electronic money tokens. And these tokens, in order to issue them, you must be licensed, you must be authorized, and you must hold reserves in the same currency as your peg. You have redemption obligations, you have prudential requirements you have to comply with, you have capital requirements as an issuer, and so on. And then we have tokens which reference either multiple currencies or baskets of currencies or commodities or other assets or combinations thereof. So anything which is not a single currency reference, but a reference and a peg to a basket of things is called an asset reference token. And if you want to be an issuer of that, you also have to be authorized to issue them. You have disclosure requirements, prudential and capital requirements, redemption requirements, and you can either redeem in the basket, the component element of the basket, your reference basket, or you can redeem in the fair cash value of the basket, depending on how you set up your regime. So that is really in a nutshell the issuance regime of MiCA. And so this is an authorization and disclosure regime. There's no bans on anything. It is just that if you do one of these activities, issue one of these crypto assets that are not financial instruments, you must comply with these requirements, and you must get your license in, or you have to submit your white paper for general crypto assets in any member state of the EU, and then you are free to go and sell it anywhere else in the EU, so you have a passport. If you want to issue stable coins, you must get authorization in any member state of the EU, but once you have authorization in any member state of the EU, you are free to sell your crypto assets, your stablecoins in any other member state of the EU. The second big part of the MiCA regime is our regime governing crypto asset service providers. These are people who provide services such as custodial services, brokerage services, advisory services, portfolio management services, exchange and trading venue services. With these activities, provision of those activities towards EU citizens on the European market requires an authorization. So you must be licensed as a service provider in a member state of the European Union. And once you have a license in a member state of the European Union, you can offer this service anywhere else in the European Union. And you must comply with the substantive requirements governing different kinds of activities. And these are requirements of prudential nature. So you must hold capital. You must meet governance requirements about how you as an organization are set up. You must meet rules governing the management of conflicts of interest, and so on. So that is in a nutshell what the MiCA regime is about. Alongside that, we also have rules on governing money laundering or anti-money laundering, and these rules are basically implementations of the international standards, which are transposed into European law, so the FATF standards. And then we also have rules on tax, mainly on the exchange of information between tax authorities for crypto transactions. That, in a nutshell, is the European regulatory regime, the EU regulatory regime for crypto assets. Thank you.
Thanks, Peter. So last on our way to the west is Latin America, sorry. So for that, I would like to hand over to Mariano to give us an idea of what's going on his continent, especially as far as I remember, the FATF is just visiting you. So that's probably also worth flagging, and the outcome of that, if there is anything to share. So over to you, Mariano.
Hello, everyone. I'm really glad to be here. I have the responsibility and the challenge to entertain you for a couple of minutes after such good, information from all other regions. I did my homework. I'm gonna talk to you about the top information of some of the Latin America's main economies. Just a very brief FYI. Latin America and the Caribbean is composed by 33 countries. 662 million people live here. Maybe some of you are from around the world, and these numbers will help you to have the good dimension of Latin America. And basically, three main languages are spoken here: Spanish in basically everywhere, Portuguese in some countries, and in just a few countries we have French-speaking nations here in Latin America. The level of crypto adoption here is really high. The last Chainalysis report includes in the top 20 countries, three nations from Latin America, which the first one is Brazil in the 9th place, Argentina in place number 15, and Mexico in place number 16. And basically, the adoption in Latin America of crypto assets is explained by two main things that are in fact interconnected. One is that many of our countries go through strong devaluation processes of the national currencies, and some of our countries have a very high inflation, right? I am not happy to tell you this, but FYI, in my country, my home country, which I absolutely love, our national currency lost around 97% of its value in the last 20 years, 25 years. So, I mean, this is for you to understand how difficult it might be in our countries, to save and invest, etc. So crypto here, in that sense, helps a lot. Maybe we're going to talk a little bit about that later in the conversation, but this is important for you to understand our context. I'm gonna do a brief, just some points on our top 5 economies, which are Brazil, Mexico, Argentina, Colombia, and Chile. And I'm gonna make a brief mention on Bolivia and El Salvador, because this will help you to have a good, picture of what's happening in Latin America. First of all, Brazil. In November 2022, a crypto law passed through the Congress. The authority of application is their central bank. Right now, they're working on the specific regulation for virtual assets and virtual asset services providers. One good thing that Brazil made and that we're trying to also implement here in Argentina is that their central bank gave their virtual asset services providers 180 days, that is to say half a year, 6 months, to make all of the necessary adaptations in order to be compliant with the which I think that is good news, because half a year is a good amount of time for everyone to make their homework in order to be compliant. Crypto assets are recognized by the central bank as a mean of payment, which is an important piece of information. Mexico, their fintech law in 2018. Remember, I told you Brazil 2022. Mexico started a little bit earlier in 2018. They have a fintech law, which was the first fintech law in all Latin America. Their fintech law, which basically the authority of application is the National Banking and Securities Commission. They have a unified regulator. Both banks and securities are unified in one regulator. They have a license, which is a financial technology institution license. There are some very big crypto companies in Mexico, such as Bitso, for example, which is one of the largest crypto companies in Latin America. But they do not have a big number of companies that have licensed it in Mexico due to a pretty high minimum capital requirement of around $200,000, which is not something easy for startups. But they've been around with the subject since 2018. The third economy is Argentina, my home country. Right now, in fact, today, as we speak, there is a bill that will be a debate in Congress with one bill that it's not specifically about crypto assets. It's a broader agenda around anti-money laundering, which includes the virtual asset services providers as regulated companies. And you just mentioned the FATF. Right now, during these years, the FATF is doing some visits around the Latin American countries. They've been in Brazil in 2022. That's why the date of this law I mentioned a couple of minutes ago. And right now, as we speak, they are here in Argentina, and we will be around for the whole year and making the national evaluation. And we need it in order to be compliant with the FATF regulated. So today might be a pretty important day. And one important thing is that if we are not able to pass the bill through the Congress, the president is already is about to issue, I don't know how to say it in English. In Spanish is Decreto de Necesidad y Urgencia, which is a special regulation issued by the president itself in order to be compliant with the FATF, with what the FATF will evaluate. And basically, our National Securities Commission will be the regulator for the registry of virtual asset services providers. And we are, as an association, we are strongly working with all of the regulators in order to have the best possible regulation and a good time of at least 180 days in order to help the companies be ready. Colombia is working on a sandbox. Colombia is a country where also the adoption of crypto is pretty high, and they are actually working on a sandbox that will include companies that work with crypto assets. And finally, Chile has a fintech law, which includes the financial services providers, which are the companies that issue and that provide virtual assets. They are working, it's pretty recent, it has around a year. 2023 was the year of their fintech law, and they're actually working on the details. And finally, Bolivia has a total prohibition on crypto, which is it's an exceptional case in Latin America, and El Salvador, which is exactly the opposite case. Bitcoin is absolute legal tender in El Salvador. In fact, it's their national payment system is interconnected with Bitcoin, and basically every merchant accepts Bitcoin there. And the national government also has its own savings in Bitcoin, so they hold Bitcoin. So it's like those are maybe the two, let's say, extreme cases. But to finish these minutes of Latin America, although there is no regional initiative in regards to crypto assets, usually our region moves, like as a sort of block where, some countries might start a couple of years earlier, other countries might start a couple of years later, but in the end, when you go back through history, everything happens in a lapse of around 10 years, and all of the countries in Latin America, move to a certain point. So this is a brief introduction to what's happening in Latin America. Regulators have just one last thing. Regulators have a big challenge, and also, they need to be really careful because they are regulating something that already works. People use it. People really like to have their access to crypto, so they're going to regulate something that is actually working. So if the regulation is not, comprehensive in terms of letting the companies, do their innovation and, keeping the right incentives to the actual players to keep playing and the new players also to arrive, well, they might crash something that is, as I said, already working. So each of the associations and chambers, fintech chambers and crypto chambers in Latin America are doing a strong work in order to, have good regulations that will not only let the actual players keep playing, but also, I would like to say, to turn Latin America into one of the crypto capitals, in the crypto hubs in the world.
I think that was the perfect segue. That's what we need. And I want to turn now to Patrick, who has the pleasure to give us the business perspective. After now, he basically got a tour de table from east to west. Maybe as Circle is touching on a lot of regions and problems that you heard, or also providing solutions. When you look at this from a business perspective, do you feel encouraged about what you see in here? Where do you see the pain points? Is there regional coherence? Is there best-in-class examples? How would you analyze the current landscape that you see as a global company?
Yeah, thanks, Robert. And first of all, hi, everyone. My name is Patrick. I work for Circle, and I'm very glad to be part of this truly global panel. I think, I keep myself brief so that we'll have a few minutes also to discuss those with other panelists. But I think overall, it's obviously something that is positive for the industry and us as company individually, that there is, those developments across the globe, that we see more and more jurisdictions creating regulatory clarity and enabling companies like Circle to really follow a concrete rule book in order to be compliant with local rules and then offer services in that local jurisdiction according to those local laws. So I think, generally speaking, just taking this on a very high level, it's a very positive development that, as you know, Robert, we have been fighting for a very long time in Europe. And I think other folks and peers have been fighting for those, as many in this round here today, across the world. So let me say this first. Obviously, as a inherently global business, there's also challenges with complying with local laws in every single jurisdiction, especially when it comes to a inherently global and fungible product such as a stablecoin, for example. And so just to give you one example, if every single local jurisdiction requires a stablecoin issuer to both issue the stablecoin in that jurisdiction and also keep reserves in that jurisdiction, we might end up in a global framework where you need to hold, a small part of the reserve in every single jurisdiction across the globe. And I think that's not in the interest of, the service providers, such as stablecoin issuers, nor is it in the interest, I think, of the regulators to have, risk and reserves spread across the world, which would increase operational risk and financial risk massively. And so I think one key step for the future and one key action item for regulators will be to try to harmonize those rules going forward and to create, global standards through the global standard setting bodies such as the FSB, Basel, etc. But also make sure that all these different frameworks that are being developed are compatible with one another, and don't create friction for service providers like Circle and other global businesses.
Okay, thanks, Patrick. Maybe let's have a look if there's any questions from the audience before we go into our final round. I don't know if anybody from the audience would like to ask a question, then please just raise your hand. Let's give it a sec. Anybody? Okay, good. Then let me ask you, for the sake of time, one question to each of all of you. I mean, Patrick already mentioned it. There's the need for global coherence, right? Collaboration. There's different timings and speed and markets. So looking at that particular issue, what is the outlook for yourself from your perspective, from where you are, on where this will be going? Who will be the drivers? And what needs to be done in practical terms to actually make this work, right? So we basically, when you look at the global spectrum right now, you have regions where there's high adoption and there's regions where there's high regulatory availability, let's see. How do we make sure that those two come together? Is there, I mean, anybody that thought about that? I'm pretty sure some of you have, because I discussed it already. So maybe we can start with the two regulators that we have on the panel to ask their perspective. That might be maybe cynical or rather optimistic. Let's find out. So maybe ladies first. Maha, what's your view on this? How do we bring all of that together? It's easy.
Yeah, so disclaimer, before I moved to Qatar, I was based in Germany, where I also saw firsthand how regulation of different digital assets sectors would work. Coming to Qatar, what I realized is that there is a chance to get things right, because we do not have to wait for 27 countries to agree on a certain regulation, have a long testing period. We would be able to regulate and implement regulation on a quicker basis. That said, there should be a bit more to be done around disseminating some of the facts and fictions around the use of blockchain versus certain cryptocurrencies and digital assets, because there's still a bit of room to raise awareness that not all cryptocurrencies are bad and they're not associated with speculation or money laundering. This is still some work to be done. So I would say that based on the two jurisdictions that I was with, Europe was seen as the regulatory maker. The rest of the world could be seen as regulatory takers with modifications and lessons learned. I think that banning crypto generally is not a long-term strategy. It's just some time to reflect on how to best regulate without killing innovation. The last point I want to make in the interest of time is that there is a recognition from the state of Qatar to distinguish between real asset tokenization and real use cases of blockchain versus the speculative part. And what is very interesting to be seen in the next couple of months and years ahead is how we can use this technology to democratize access to Islamic sukuk and green financing. So thank you.
Thanks, Maha. Peter?
Peter, unfortunately, is not on the call. I feel like there may be some technical difficulties, so perhaps we can move.
Okay, then let me go east then. Then Oriol, maybe you want to comment on that quickly for the sake of time, just so that everybody is aware. We have like a bit less than 10 minutes. So please keep yourself short. That would be appreciated. Thanks.
Sure, no problem. No, I mean, just to make it fast, I agree with everything that Maha just said right now about this topic. I would say that it's very different when we talk about the European Union than when we talk, for example, about East Asia, because in one case, the European Union, there is like this supranational organization, and whilst things can be more complex, you can also like legislate and regulate, thinking of like richer, like a wider amount of people, whereas when we are talking about different jurisdictions, different sovereign countries, it all becomes much more difficult because, as we saw in East Asia, each country may have a different approach. The one that, for example, India has is different from China, different from Hong Kong. So yeah, I think in the end, it's all about finding this balance between innovation and proper regulation, or making sure that investors are safe, making sure that you're not killing innovation. And I think that should be doable. It's all about each country, each government to reach that level. And also, of course, if they want to. Yeah, I think I made it short.
Thanks, Oriol. Ali, what's your view on how we put this forward, or move this forward, rather?
So first things first for me, to just remind investors, anybody who's really interested in Africa, is that Africa is not one country. It is 54 countries with very different perspectives. And we, as an African, I always say that the African Union needs to have a much stronger policy guiding conversation to be able to bring all these together. So we will continue to see different countries having diverse views and positions when it comes to digital assets and cryptocurrencies. Our hope is that with initiatives like the Pan-African payment system that is slowly taking shape, that we'll start seeing a lot more cohesion around a one Africa policy and regulatory frameworks, not just for crypto, but across financial services. Thank you.
Thanks, Ali. Mariano, you already lined out the different speed on your own continent. Is there a better forum to discuss this in your region that also feeds into global that we could tackle?
It's just 30 seconds. I mean, crypto, like it or not, is a global network. It was designed that way, and I think it's extremely good that, I mean, it has that attribution. It's global. So I think regulators, not only within regions, but also worldwide, should be smart enough in order to create a let's say, even regulatory landscape, because if not, they will be under the heavy pressure of, for example, regulatory arbitrage, where big companies will choose certain regions or certain latitudes to, invest and create their companies. And if the crypto regulation landscape in certain countries or regions is not friendly, they will be virtually I mean, no one will be there, no? So there will be no investment, there will be no job creation, they will kill the adoption. No, they won't kill it because it's impossible to kill. There will always be ways to have access to crypto assets, and I think it's great that happens. So if I would be in the spot or in the chair the regulators that right now are writing the details of, you know, the legislative landscape for crypto, I would be really interested to be, you know, a friendly area, because this is going to happen, like it or not, and we are just in the beginning of this era, and it will be unstoppable. So this is just my thought around it.
Thanks, Mariano. Maybe as a last line from you, Patrick, which advice would you give participants in this ecosystem to contribute to these discussions based on your experience?
Yeah, before I go there, just two quick comments on your previous question. I think, firstly, from my point of view, what's critical is that, you know, regulators and policymakers keep iterating and evolving fast. You know, crypto changes rapidly in Europe. I mean, MiCA was in large part a reaction to two things, right? The ICO boom and bust and Libra, and both like phenomena are not really present any longer in right now. And so we need, you know, policymakers and regulators to iterate and adapt fast to the technology and trends. And for example, if we realize in Europe that the framework works for crypto asset service providers, but it doesn't for ARTs, for example, then we need to adapt and act accordingly. And a second comment, that I think we need on a global basis at some point a system of regulatory equivalence where major jurisdictions recognize and accept regulations and licenses that companies have gained elsewhere. You know, the standard bar for that should be put very high. But in general, and that's a concept that exists in traditional finance as well, right? If a company operates across borders, for example, a large insurance company, and is regulated by, you know, the United States, for example, oftentimes that license and that authorization is recognized by other authorities in Switzerland or Europe, other major regulators. And I think that's a concept that needs to be replicated in crypto as well. And then one quick minute on your final question, Robert. I mean, depending on the timeline and where you are globally, sometimes you're still at a stage where your local regulator or policymaker is still in a stage of education and what it actually means to you know, regulate crypto asset, what kind of services and use cases exist. So that's, I would say, the basic stage. In others, like the European Union, I think we moved way further than that. We're now at the stage where if you want to provide input and value to the ongoing regulations, you need to respond in a very technical way to, for example, level 2 regulatory technical standards that specify the technical specificities of MiCA rules. So here, obviously, much more technical knowledge and time and effort would be required. So I would say, depending on where you are in the world, try to get involved, try to contact your, you know, regulator, your policymaker, try to see what kind of open public consultations are out there, what input and expertise is required, and then act accordingly. But in Europe, I think, Robert, you are, you know, I think in Europe, if people have questions, they should just reach out to you and ask you.
Thanks. More work. No, but I appreciate it. Very nice. Thanks, Patrick. On this note, I would like to hand over to my colleague from GIFT, Malik, who will head the other panel that we're having the pleasure now to listen to our colleagues that work in Asia and Africa, and enlighten you on the comparison between the European and the Asian developments there more specifically, right? So we just had the high-level overlook. We now go into a bit more detail, a bit more technical, and a bit more nerdy. So I hope you all stay with us. And with that, I hand over to you, Malik. Floor is yours. Thank you to the panel for everybody. And I hope you still stay with us and listen to this, hopefully equally interesting conversation. Thank you, guys.
Thank you very much, Robert.
Thank you, Robert. The one and only Malik. The one and only.
Thank you.
Global fintech leader.
So, so nice to see you, Mariano, and so nice to see so many of my colleagues and friends in the first panel. Robert, I must say it was an excellent discussion. You guys covered so much around the world in 60 minutes. I think that's always a challenge. So kudos to all of you. And it'll be an excellent segue into what we're going to discuss. You guys, of course, covered it across the globe, across regions. So we are going to look at the big picture as well, and then we'll deep dive into specific areas as well. And as Robert and Dr. Oriol, our Secretary General, already mentioned, we are here as part of our global collaboration that we have kickstarted with one of the premier think tanks in Europe, Blockchain for Europe. So the Global Impact Fintech, or the GIFT Forum, which is one of the leading fintech think tanks in the world with members from 70 countries, has embarked on yet another strategic partnership, this time in Europe. And this webinar is part of our joint attempt to pool forces and bring together global expertise to all of you. As you can see, we had people from literally one place where the sun has already set, and for us in this time zone it's quite late. And on the other hand, we had our friend Mariano, who was probably just waking up and having his coffee in Argentina. So that's really the width and depth of experts we have at GIFT, and we are delighted that this partnership with Blockchain for Europe has kick-started. So you can be rest assured that this is the first of many such knowledge sharing sessions that we'll bring to our members and to the entire global community, because our objective is to bring the most current, cutting edge, but also the most objective and unbiased, without any agenda, if I may say so, information to all our viewers, our audience, and our members. So with that, it's my pleasure to host the second panel of today. And I will do a quick round of introductions myself. After that, if any of you want to add more, please feel free to. But I have had the pleasure of being on several panels together, moderating several panels, including one just about 15 days back with Professor Dr. Douglas Arner, who's joining us from Hong Kong. He's a well-known global authority on all things fintech, crypto, digital assets, especially around the regulatory and policy aspects. And in his hat as a professor, he's written and co-authored a lot of papers in this. So for those who are really keen to learn more about this, I would encourage you to go and Google his papers and read them. You'll find a wealth of information. So Doug, always a pleasure, and thank you for joining us. And great to be on a panel with you yet again. It's quite an interesting thing that today we have two academics, and it's my pleasure to now introduce my other dear friend and another very well-known academic and fintech expert. He's been with me in the global top 50 listings as well, Professor Dr. Nafis Alam, who's the professor of finance and heads the business school at Monash University in Malaysia. He's also written a lot of papers, including with the Cambridge CCAF, Cambridge Centre for Alternative Finance. So I'm delighted to have two scholars here with me who have written extensive papers. So it'll be fun for me to pick on their brains. And then we have two policymakers here. Maha, whom you already saw in the first panel, she was terrific. So I'll use this opportunity to probe a little deeper and further on Qatar's journey. At this stage, I must add that our GIFT Forum is in active discussions with QSC as well. And in fact, one of our directors from Qatar is on, Dr. Dalal is on the advisory board of QSC also. So it's great to have Maha join us to bring Qatar and the MENA region perspective. And last but not the least, because this is a joint initiative with Blockchain for Europe, we are delighted to have Dr. Joaquim. I hope I pronounced that name correctly, because I guess the Portuguese and Spanish pronunciations are a bit different. So please let me know if this needs to be corrected. Dr. Joaquim is here, and he is joining us from the European Commission. So with that, let me get started. I make the best use of this opportunity. Dr. Andrew could not join us, unfortunately. he's down with fever, so we'll miss his presence, but we'll try and pick the brains of all these experts. So let me start with Dr. Joachim and Dr. Douglas. I think I'll zoom out a little bit because there was a lot of in-depth discussion and information in the first panel, and I'll actually go to the basics, the 101. When we talk about policies and regulations, especially in a space like fintech or digital assets or blockchain, which are innovative and often disruptive, there is always this view in the industry and the ecosystem that policies and regulations are often enemies of innovation. So I want to start with you, Doug, and then Dr. Joachim. Please share your perspectives on how policymakers in Asia and the EU view this, and what are their key objectives when they set policy. We've heard a lot about, and we'll of course go deeper into policies in Europe, MiCA, or what's happening in Asia, ASEAN, MENA. But if you had to zoom out and say these are the 2 or 3 key things that regulators and policymakers really focus on when they set policy for such sunrise sectors, what would those be?
Thanks for that, Malik. And I think it's interesting because we spent a lot of time over the past 15 years since the 2008 crisis, really sort of looking at all of these issues. And today, I think there is a real effort to try to understand new technologies, new entrants, new business models, but to understand both the opportunities and also the risks. And I think that when we think about financial sector policymakers, really today, they're primarily focusing on 5 different areas of concern. They're looking at financial stability. In other words, what's the risk that this new, whatever it may be, will cause some sort of financial crisis? They're looking, in many cases, at issues around market efficiency. In other words, we know that finance works best when it has good quality information. And so financial regulators actually work a lot from the standpoint of information quality, making sure that markets and infrastructure work properly. So that's really efficiency, transparency. The third is around market integrity. This is often issues around criminal, terrorist, money laundering sorts of issues. The fourth is very much around monetary stability. In other words, trying to deal with issues around having a monetary instrument as a public good that enables economic activities and general social functioning. And I would say that our 5th general objective today is one that is generally around development. I would frame it as sustainable development, but sometimes it's framed as innovation, sometimes it's framed as competition, sometimes it's framed as economic growth. And I think when we're thinking about financial policy, regulators are constantly looking at new technologies, new innovations from all of these different angles, and they're looking for both opportunities, but also risks.
Thank you, Douglas. As always, you are the best person to start a panel with because you succinctly bring so many aspects in less than 5 minutes. So, Dr. Joaquin, your perspective.
Yes, I'm grateful to Douglas for having ticked so many boxes. On top of that, I would say we take an opportunity-driven approach in Europe that is basically driven by what the technology enables. And what we are discussing here today, blockchain and crypto, emerged with the Bitcoin white paper during the financial crisis when I think the centralized system was exposed to its immense internal risks, and decentralization through cryptocurrencies, later crypto assets, etc., was a way out of a number of these problems towards more efficiency, but also towards more inclusion, towards more democratization of the society. So we have been following that from day one. And we had a lot of, I would say, discussions internally before we were ever charged with any form of regulation. And in my opinion, regulation always comes last. So you watch the opportunity space, you see what you can do proactively to support that. Of course, you need to identify risk. But of course, let's not forget that even when we started drafting MiCA, the crypto space was relatively small compared to the TradFi system that we had there. And we started drafting that in 2017 when the ICO hype came about. Patrick has already alluded to that in the previous panel. 2 years later, the politicians got awake with the Libra situation, so then we added a stablecoin section as such. But the whole purpose of MiCA is basically to add legal clarity in an area where there was a big demand for that. And that is actually something that we very often observed that came also directly after the financial crisis with alternative finance and crowdfunding. These new platforms that were coming with new business models were all operating in a gray zone. They knew they were operating in a gray zone. Some countries were tougher on them than others, and they asked for regulation. Now, regulation is a dangerous thing because it is one thing what we draft in terms of regulation, but then especially in the European Union, there is a very complex political process on top of that. So our drafts go to the European Parliament, they go to the governments of 27 countries in the European Union, and that is a very long process where actually what you get at the end can be very different from what you put in at the beginning. And you need to integrate that political process when you discuss about really the demand for regulation. So we are fully aware, and we agree to that all the dimensions that Douglas mentioned are, of course, relevant in making regulations. But specifically, when we are looking to MiCA, to be very honest, it is not really about financial stability. It is not about many of these other issues, because, to be honest, what we have now on the crypto market cannot endanger financial market stability and all these other things. It was putting a discussion paper, I would say, on the market where basically we set out our vision and it is for discussion. Now, of course, MiCA is only an extremely small part of the whole spectrum. So that's another dimension of regulation. When you think about something, when you put it on paper, it's a very good disciplinary exercise to focus your thinking on what you're actually doing and what you're not doing. MiCA is perhaps equally important for explaining what is not included in MiCA, as is, for example, everything that is decentralized, because MiCA is very clearly on intermediaries. But when everything is truly decentralized, and we might come to that, then there is no point for traditional financial regulation. So we clarified in MiCA not only what is in, but also very much what is out. And we started a process that has now led to a series of sandboxes, other co-learning fields, where basically we would like the public and the private sector jointly to look at how we can advance in an opportunity-driven way the development of the sector. We are aware of the risks. These are to be addressed, of course, also with the technical and administrative standards. But let's say the bottom line that we take is that we are very much convinced about the technology, which is not just any technology, but I think a complete breakthrough in terms of how we scale trustworthy interactions in our societies. Therefore, we fully support it. And for us, it's, I would say, a learning curve. And the last feature that I would like to stress with that is, if you compare it to any other technology we have, regardless of where this is, the one thing that differentiates crypto from everything else is the immense speed of innovation and development. So this is a truly game-changing element, because when you look at traditional regulation for capital markets that are mature markets for incumbents, limited companies, you know the markets very well, you can take years to regulate. We will never have that in crypto. And it will go faster and faster now with the uptake of artificial intelligence, with the need for quantum secure encryption technologies, with all the things that technology can bring up. So a public entity will never be able to discuss and decide that on its own, but it has to activate the market. That is precisely what we're doing with our approach to regulating. We're activating the market to see what is emerging there. And that is actually not only related to the private players, but also to the public players. I'm a very strong believer in competition. Competition is not only between the companies on the market, competition is also between regulators, because we all have limited mental capabilities and different contexts. So let us discuss different ideas. Let's see what works and not, and then let's streamline that, but not already start a regulatory process with the one fixed outcome in mind. That will not work.
Thank you, Dr. Douglas and Dr. Joachim, for that very in-depth articulation. So a couple of things emerge quite clearly from your opening notes. One is obviously, you know, as Doug said, everything from systemic stability to monetary policy stability to consumer protection through fostering competition, etc. These are the macro objectives, if I may say so, of policymakers. And then, as we heard from Joachim, that public consultation or consultation with stakeholders is critical, because the speed of innovation is such that Whether regulators like to accept it or not, they will probably forever be playing catch up. So it's important to engage with stakeholders and build, not just engage, but build more kind of a collaborative dialogue with industry stakeholders. And on that segue, I would like to go to Dr. Nafis, who's an expert in Asia, especially Southeast Asia and ASEAN. He's based in Malaysia. So Dr. Nafis, at least for the three of us, you, me, and Douglas, being in Asia, we see it firsthand very regularly that this part of the world is often seen as perhaps leading in innovation when it comes to all things fintech, blockchain, crypto, and with all due respect to Europe and the MENA region, I think in many areas, partly by design, partly by the demography of this geography, things like eKYC, for example, to drive financial inclusion, to virtual banking license frameworks that so many countries from Indonesia to Malaysia to Singapore to Hong Kong to Philippines and have introduced to fairly comprehensive and pretty early on, if I may say so, digital asset frameworks. So Bank of Thailand, for example, is one name that comes to mind in this space. Do share, for the benefit of our global audience, some best practices and some important and impactful policy initiatives that you've seen in this region, in Asia in general, but specifically in Southeast Asia.
Thanks, Malik. And before I go into the actual context of what's happening in the Asia, I just want to pick up on what Douglas and Joachim was talking about. When we talk about regulation, we mostly talk about from the players as well as from the regulatory regime perspective. But one thing which we always forget is the consumers. And that's where we are coming from, the consumer perspective, especially in what you talked about, the eKYC. The challenges in this part of the world is, I will say, uneven development, where countries like Singapore and Hong Kong, and maybe in context of Japan and India, might be taking a lead. But again, if you look into countries like Malaysia or Indonesia or Vietnam and Thailand, they are still into the development phase, I will say. One of the biggest challenge with the digital finance, what's happening, is around the KYC. And I think coming from the Indian subcontinent, Malik, you will agree with me that the challenges around eKYC is one of the biggest challenge in this part of the world, where a consumer has to go to different bodies to get the same information being verified. One recent example which India is taking a lead, which only happened a couple of weeks, I would want to talk about, is to try to have a uniform or a standardized eKYC platform, which they're looking into the blockchain perspective. Now, what they're trying to do here is that instead of having individual KYC for different financial bodies, they're trying to have interusability of the KYC putting into the blockchain. So instead of going to different banks and getting your eKYC verified, it can be done so something like a digital eKYC, where one customer will carry that and it can be done across the body. That is something not unique to India. If you can recall, that was something done, I think 5-6 years ago in Singapore, when they come up with the KYC on the blockchain, but I think for some reason it was not successful. But having that initiative is already a good way forward, because end of the day, we want to reduce the friction of the consumer going through these challenges. I will talk my personal example of having a HSBC global account, for example, in that case, where I have account in Malaysia and I have account in India, and both of using a similar information what I have, but I have to do a two different KYC. I understand that every individual jurisdiction have their own KYC rule, but that should be the way of transforming information, from within one jurisdiction to another, if the individual remains the same. So that's an area where we need to look upon. If the world is going so globalized, we're talking about open finance and open banking, why we are still dealing with the orthodox way of doing the eKYC. So that's one of the challenges, but I also give you the example in that context. If you look into the digital banking, I believe it's a growing area, and one of the mandate which digital banking has in this part of the world is all about financial inclusion. It's unlike what the Europe has been doing. In Europe, you can talk about digital banking as the alternative channel. It can be looked into the competitive factor, but in this part of the world, it's more about looking into from the financial inclusion. So the mandate given to most of the digital banks in the region, whether it includes Malaysia, Indonesia, Vietnam, Thailand, and so on, those who have initiated or those who are on the path to join is mostly looking into creating a financial or extending the financial inclusion, and the focus has been on to bring into the SMEs association or people who are financially excluded from that. I will talk from Malaysian perspective. Malaysia has recently given 5 digital banking licenses last year, and in the last couple of months, some of them have gone online already, and they have been started getting the traction in the market with some new innovative products and so on. But the key features for them is to reach out to the institutions which are, for example, Malaysia, for example, having the 80% of the business is within the SME association, for example. So in order to bring that to the formal channel of the banking, these digital banks need to play an important role. So what we can see here is that there is the opportunity in this part of the world, but at the same time, there is uneven growth, I will say, uneven development. And again, there is a lack of knowledge transfer, even though we have an ASEAN cohort where there is a sharing of information or sharing of technology. Recently, Malaysia, Singapore, Thailand, and Indonesia has come up with the cross-border payment gateway, which is helping them. India is also working with Malaysia or Singapore in looking into the payment gateway. So these are some of the good examples. But I think given the uneven development, these countries need to come together and share the example of that. For example, Singapore having this Project Guardian, which is a very good example of having that digital asset trading, is only available in the country. But again, if you look into the close proximity of that, I recently attended one of the event in Melbourne talking about the Invest ASEAN, which all the stock exchanges went together and talking about the features they can bring in together. So these type of knowledge transfer, Malik, is very important. Definitely Southeast Asia, or if you look into Asia, will be the hotspot of fintech development, given the lot of financial inclusion opportunities. But I think we are still lacking behind, and we are not able to extend the development across the region. So there are a lot of opportunities to talk about.
Thank you, Dr. Nafis. So I took away 3 key points from what you just said. One is that although we talk about ASEAN as a region, and sometimes at least we like to believe that it's in the same vein as European Union, it's probably there is uneven development, information sharing and more alignment needs to be brought about, both in terms of government to government as well as people to people. So, and that's something that we probably try and learn from Dr. Joaquin on how a region like ASEAN, for example, can learn some best practices from the EU, which has more member countries, but has probably developed more seamless regulation. So that's one thing. The other thing which I really liked you touched upon is the consumer aspect of it. And I think all of us as experts, we oftentimes talk a lot about technologies, about governance. We talk about the supply side of things, but when it comes to the demand side or consumption and whether consumers are taking to these new technologies, they are adopting it and adapting to it. That's something that a lot of technology players often miss out. And I've been a mentor to many companies as well. So that's one thing I keep reminding the founders that, hey, don't just have an inward view, have an outside-in view of things as well. And I think the third thing you spoke about is globality of, I know it may sound utopian, but globality of probably alignment of policies and regulations. And you gave that example of eKYC. I give that as well. Like you, I'm also a global customer of HSBC in 3 countries. And I go through the same pain as a consumer as you do. But since you spoke about globality, I think that's a great segue for me to go to Maha. When we talk about such global initiatives, people often look at hubs. And Douglas is sitting there in one of the hubs in Hong Kong. Singapore, of course, is there. Everybody talks about Dubai. But one up and coming hub is Qatar. And as I said, both me personally and at GIFT, we've had the pleasure of interacting with QFC and understanding better about what Qatar is doing in its journey. And Maha, you were fabulous, and you did an excellent articulation in the previous panel of how QFC is going about it. But I want to understand a little more from an objective and priority standpoint, what guides QFC in its priorities. You articulated the various initiatives, but maybe if you can zoom out a little bit, that would be good to understand what is guiding QFC Is it more about a hub approach? Is it more focusing on GCC, the MENA region, or is it beyond this as well? And the second thing related to this, even in the previous panel, you spoke, in fact, you highlighted quite a bit on real world digital assets. And we keep hearing a lot about RWDA, but maybe can you go a little deeper into this and specify use cases where QFC is looking into? Because when we talk about real world digital assets, again, it's one of those jargons which are thrown about very loosely, and people outside the community don't really get it. So try and enlighten our audience on both of these.
So thank you so much for giving me the opportunity to be part of this esteemed panel discussion. I have learned quite a lot in the past half an hour, so thank you for that. To answer your question about Qatar Financial Centre and how it's positioned, Qatar Financial Centre is an onshore jurisdiction within the state of Qatar. So that differentiates us from a lot of the other GCC free zones, if I might say, by being an onshore jurisdiction. So our entities can enjoy 100% foreign ownership. They're operating under English common law. We have tax agreements and treaties with over 80 jurisdictions worldwide. We have our own court, we have our own employment standards, and our firms, which currently can supersede over 2,300 firms, have their own court in case of disputes and can operate across the country. So they're not restricted to the free zone in terms of operations. Qatar Financial Centre is working closely with governmental institutions, primarily those who are from a regulatory perspective. So Qatar Financial Centre Regulatory Authority, Qatar Central Bank, Qatar Financial Market Authority, and the relevant ministries in implementing a number of strategies that will span across the next 5 years. That includes Qatar National Development Strategy and the recently announced Qatar Central Bank Third Financial Sector Strategy and the Fintech strategy. All of these strategies are trying to diversify Qatar's income, look into sustainable aspects, including sustainable wealth creation. One very important pillar that you would see across all of these strategies is the role that Qatar will be playing around digital innovation, Fintech, InsurTech, RegTech. So it is going across the whole spectrum, ensuring that we'll be ready for the future. And I believe Qatar is in a very good, unique position to do so because demographically we have a very young population. The GDP is pretty high compared for the income per capita, and we do not have a lot of issues with migrating from legacy systems. So it looks promising. It's a work in progress, and recently on the back of the Web Summit, we have seen an enormous interest in Qatar, specifically from a fund perspective and venture capital, because people are coming to the Middle East and Qatar specifically to grow their startups that are facing liquidity issues in other areas of the world. Now, to answer your question around real-world assets and the Qatar Financial Centre, or the Qatari approach, to be frank, because it's joined with the QCB, the idea stemmed from the fact that the state of Qatar does not want to build its digital asset framework primarily on cryptocurrencies or payment tokens, because traditionally there is this thought that cryptocurrencies is based on speculation and it's not maintainable. And looking into the Islamic finance point of view, you'd rather invest in something that is tangible, that has an actual underlying. And that's why the current Qatar Financial Centre Regulatory Authority's digital asset framework, in cooperation with the central bank, focuses on an actual underlying. So just to give you an example, we have exempt tokens and permitted tokens. Permitted tokens would include investment tokens. So the typical security tokens, from shares to funds to private placements of shares. In other use cases that are currently being tested as part of our digital asset lab, which is more, I don't really like to use the term sandbox, but pilot regime to work with the industry and for us as regulatory entities to also understand how to regulate. So we don't want to go ahead and start crippling the innovation by imposing very strict regulations. So we would try to work with our digital asset lab entities to understand how the tokenization works, identify certain pain points and see how we can resolve them, identify if the current regulatory framework is good enough to be applied. If not, do we need a regulation, or would it be sufficient as a guideline? And it's very, very important to distinguish between very financial services related activities versus non-regulated activities in the non-financial sector, because we also have a large majority of our firms that provide professional services outside of the regulatory sphere. So where do we draw the line between regulating, over-regulating, and learning from the specific use cases? You've asked me to provide a number of examples as to what our lab is looking to basically study and work with the participants. The use cases that are so far identified evolve around real estate. The second use case is carbon credits. The third use case is around issuing sukuk. And whenever we get an applicant to our lab that does not fit any of these criteria, we would just ask them to submit a self-evaluation form, describe the idea that they're trying to achieve, and then we would see under which category we would basically put them, regulated, non-regulated, what access to the lab would they require. We have seen a lot of interest with gold tokenization as some of the use cases. That was a bit surprising for me personally. Other use cases revolved around the tokenization of invoices, or I'm not supposed to disclose that, but within the QFC, we're also looking for something for our own purpose and our firms to BD very soon. Yeah, and that would also involve working very closely with our peers in the GCC to see if there are any types of future cooperation that we can make use of. Look into other jurisdictions, because also within these strategies on a national level, we are looking into ensuring financial inclusion and access to finance and financial literacy, since a big portion of the population is basically sending money back home. And how do we ensure that their remittance system is inclusive? How do we also ensure that certain workers are having proper access to the financial system? And I would also echo on the eKYC point that was discussed previously. So Qatar Central Bank has also issued an eKYC regulation, but I think we need to move beyond the eKYC personally and look into digital identities and sovereign identities. And that's where I see Europe has taken an excellent initiative with the having the identity wallets and looking into integrating them across different use cases. I like the fact that these identities or digital identities will also have a very strong element of data protection. This is another thing that we can learn from Europe in terms of implementation. But all of this would not work without having quality data and data that we can basically start relying on and screening. So that's pretty much it from my end. Thank you.
Thank you very much, Maha. You spoke about specific use cases, and I appreciate that when it comes to real world digital assets. So I'm going to press on a bit deeper, and I'm going to take a slight detour, perhaps a curveball for our participants, but I'm going to bring in Dr. Joachim and Dr. Douglas. When we talk about real world digital assets, I think the first use case that often comes to mind, and Maha also spoke about it, is real estate tokenization. Makes sense because there's trillions of value locked in real estates. Not everybody can afford expensive real estate, so it has so many dimensions, including financial inclusion, where you are saying, okay, if you can't afford a $500,000 or a 1 million property, you can own a fraction of it. And we've seen everything from hotels to major condominiums going through tokenization in places like Singapore and Hong Kong, etc. And for those of us who've been in this space for quite a while now, like us, at least I've been hearing of this since 2020, probably in some different form even before that. My question is, and I'm going to zoom out, and now I'm having the advantage of having an economist on this panel as well. The macroeconomic situation is so different in 2024 versus what it was in 2020, right? So when we spoke about real estate tokenization and perhaps a token which offers you 5, 6, 7% return in terms of rental yield, etc., like REITs do, it made sense. The risk reward ratio made sense. But today, when we are in a high interest regime, and I think by 2024, even the most passionate crypto maximalists would agree that this is not a flash in the pan. Central bankers are going to keep rates higher for longer. We've been reading about it. Even the Fed is taking very ginger steps towards cutting interest rates. And what has been perhaps in my lifetime unprecedented, at least, is not just the increase in interest rates, but also the rate of increase. Right? We saw sub 1% in 2020 after the money supply was flooded, to 5%, 10-year treasury yields hitting 5%, I think sometime last year. So that kind of a jump is perhaps, at least in my lifetime, I have not seen that, almost kind of exponential curve. And now also people are saying it's not going to come down in a hurry. We are going to be in a higher for longer environment. So here's the question to both of you, wearing your academic and economist hats and your digital asset hats as well. On the one hand, you have what is generally considered the safest investment in the world. 10-year US Treasury is giving you 4.5%, 5% depending on the rates. And on the other hand, you have a real estate token, which even if it offered you 6, 7, 8%, has inherent risks embedded. So how do you see this space and the future of real world digital assets in 2024 vis-a-vis, let's say, a very different environment in 2020? We'll start with you, Dr. Joachim, and then we'll go to Douglas.
With all due respect to your lifespan and mine, which is short, I'm primarily an economic historian, and I must say that the tokenization of real-world assets has been out there through the existence of human beings and maybe before. We've always seen in history the tokenization of real-world assets that had a value and that have been traded offline. And now we just have a technology that enables that to scale in a trustworthy way. So in that sense, economically speaking, I see absolutely nothing new, be it through tokenization, be it through ledgers, be it even to DAOs, where I'm just currently running a study to explore those, because the principles have always been there. And that is actually also why I think that the tokenization of real-world assets is indeed the future compared to other things that we have seen. We see at the moment the tokenization of everything. It's not only real estate, it is not only gold, which I think is a substantial part of every decent portfolio. It's the tokenization of diamonds, of natural resources that are sitting in the ground, of everything that has value. And why is that so? Because in my opinion, what we're really moving to, you might call it Web3 or whatever, is that we will step for step abandon the notion of money. That's a historical aberration of the last 500 years, where really you have centrally issued money in a way, but we come to the tokenization of value. Value is a subjective concept, and value can be everything that is important in a community or to an individual. That has always been exchanged, that will always be exchanged. So in a way, what we are trying to prepare, and that is a lot of mental preparation also in terms of the language that we use, the concepts, the interoperability, etc., to enable platforms to exchange value of any kind in a lot of different contexts, depending on your society, depending on your values as such. The interest rates, or what the central banks are doing, with all due respect, is completely irrelevant in this regard. It is, of course, relevant for your investment decisions right now. It is, of course, relevant when you look at what will be the allocation between different asset classes. But for what we are discussing here in depth, it does not matter. And the same, with all due respect, in my opinion, applies to things like CBDCs, but also you mentioned the dollar. I mean, in my opinion, let's be clear, tokenized real-world assets, Bitcoin, whatever you have in that space, will still be there when no one in future generations will know what the dollar or the euro is. I mean, these are typical concepts that emerge in a generalistic perspective as such, and that is the, let's say, radical step that we are currently taking to develop these things. CBDCs, in my opinion, are a sort of learning curve for central bankers and policymakers to see how the technology operates. We have to still see, wherever we are in the world, a really convincing use case that is not pushed through or tried to be pushed through by governments, and even China fails in doing so, at least within their timeline. We see stablecoins, which in my opinion are more or less a means to reduce the fluctuation, the short-term fluctuation of other crypto assets, but they don't have any deeper economic meaning. The future is the tokenization of what we see in the real world. And that has a social function, perhaps to end there in this sort of relatively broad outreach. I mentioned DAOs. One extremely important use case for DAOs is not just the tokenization of real estate as such, but a democratic tokenization, because it's not only about the money, it's not only about the investment project, but it is about access, it is about governance, it is about what rules does a community apply. So if you take anything that is a little bit bigger, you tokenize it, you fractionalize it, you can give your rules within the community according to your principles. That is the really convincing use case that is out there, and that applies to any type of commodity that you're there. We are heading, as we all see, towards a multipolar world. Those that think they are in control will lose that control. Others will try to come up. It's much more of a competition, very exciting situation as such, but the economic principles underlying all of that are completely the same, and they are now enabled through the technology that we have.
Thank you. You've really, gone into the philosophy of digital assets, Web 3.0, and the origin, everything from the origins of money to what really is defined as value per se. So, probably a quick masterclass in the philosophy of Web 3.0. But Douglas, if we were to probably zoom in a little closer to, today, and as I said, in 2024, 2025, totally agree with Joaquin that we are in a multipolar world, and it's only going to go in that direction. Perhaps the world and the financial system as we've known and seen it for the last 40-45 years, at least in my lifetime, will perhaps not be a very good gauge of what's going to come. But within the parameters of the economic system, the financial system that we exist in today, again, I spoke about the interest rate regime, and like it or not, big money still goes into, at least at this point, goes into US treasuries, and that is at 4.5%. So if we talk about portfolio managers, but more importantly, and since you spoke about access as well, for the little guy, for the individual who's looking to make returns on his investment, an individual investor in Qatar, for example, for whom Maha has opened real world digital assets, is the risk reward trade-off worth it? How do you view this thing, both in terms of the economics and the philosophy, but also the opportunities and risks?
Thanks for that, Mark, and thanks for that, Joaquin. I think, yeah, I want to focus on a couple of places in terms of where we are right now. I think your point, Malik, about interest rates is quite accurate, that one sees a change in risk profile. It means that I think Joaquin's point about providing a platform, exactly right, from the standpoint of evaluating different opportunities, the returns that one can get across different firms, offerings, etc., become quite important. And that change in the interest rate environment, moving from what was an unusual zero interest rate environment with very easy availability of money, in which case the economics of almost any project made sense, that's changed pretty dramatically. And it means that the way that investors, venture capitalists, whatever, look at different projects now requires, if you will, a more concrete return in many cases. Now, the aspect of real world assets, and I think both of you are quite right in the sort of evolution of this. And if we think of things like stocks, for instance, or bonds, these are different forms of tokens that represent some sort of interest. At the same time, I think we've had lots of discussions around a range of real world assets. And as we've tried to put together real cases, I think what we're finding is some are working better than others. Real estate is proving difficult. Anytime you have a sort of physical thing that you are then trying to represent by a digital token can become problematic unless you can somehow secure that real world thing in some place so that the digital representation is actually tied to it. Artwork often works very well where the artwork may be actually in a bank's vault, and therefore the physical thing is secured in a place, and the digital tokens can easily trade. Real estate, of course, doesn't move, but we have all kinds of legal issues that we've dealt with over decades in the context of securitization transactions. And in many cases, real world tokenization is effectively a blockchain-based asset-backed securitization in terms of the documentation and structure. And so it's not necessarily proving as exciting as perhaps was hoped at one time. The other area that's probably proven a little bit less exciting than I think had somewhat hoped was in the context of, say, listed equities. The reality of a world where we're moving to T+1 or in India and China, T+0 settlement, the efficiencies of these systems mean that it's very difficult to build competitors. At the same time, where we are seeing some real progress is in areas where there are a lot of underlying inefficiencies, lack of transparency, and often barriers to access. And I think certainly here in Hong Kong, we are seeing some very exciting real projects. A 6 billion Hong Kong dollar green tokenized bond launch just in the past week. Debt capital markets. Debt capital markets is something that is traditionally done over the counter. Pre-2008, you often had dealers with stocks of inventory quoting wide spreads. Capital requirements, post-crisis regulations have made that inexpensive, unattractive, and the ability to build particularly permission ledger systems provides a much better system than what we have. And I think this is a huge direction that enhances transparency, enhances liquidity, reduces some of those spreads, and enables access more widely. The other area where we're seeing some really successful developments, both on the private side, but also on the public side, is in the context of foreign exchange. And this is one area where I think the CBDC projects are quite interesting, is on the wholesale Forex side. I'm admittedly less excited with the retail domestic side of those. So I think that's a quick tour of kind of what I'm seeing in the space on the ground.
Thank you very much, both of you. I'm going to zoom out a little bit since we've discussed so much about digital assets, real world digital assets, right from the philosophy to the use cases, the opportunities, challenges, risks, how the macroeconomic landscape has changed first after 2008 and then after 2020. So I'll go to Maha and Dr. Nafis. We hear so many definitions and we heard so many things today, but we hear about security tokens, then we hear about tokenized securities, we hear about non-fungible tokens, which became a rage in 2021. And of course, now, when that wave craze and mania subsided, we heard about real world digital assets and how we can unlock value. There are so many definitions, so many ideas, so many interpretations. So if you had to really demystify and super simplify digital assets for our audience, how would you do it, perhaps in 1 or 2 sentences? Maha and Dr. Nafis.
Thank you so much. So this was a question that really led me into all things DLT and digital assets. Back in 2017, when we were looking into, in my previous life at Deutsche Börse, we were looking into upgrading the financial infrastructure to be DLT compliant, we started being bombarded by a lot of terminologies. Token, blockchain, DLT, ledger, Genesis, fork, and it was so confusing. It's like someone speaking a different language. And that's when we discovered ISO, the International Standard Setting Body, and they had a specific task force, which is ISO TC307, that was dedicated at that time to come up with an internationally recognized taxonomy of everything around blockchain and DLT, which came up with a very comprehensive taxonomy for different digital assets and tokens. Long story short, the way that I personally see it, and which is also mirrored in a very recent CFTC paper dealing with digital asset taxonomy, is I see digital assets as the very broad container that would include different things. Digital assets does not have to be cryptocurrency. It could be any sort of assets that could be dematerialized or issued in a digital way. And then you would have specific tokens that would exist on a specific blockchain or DLT, and it could range in terms of features as fungible and non-fungible, or based on the underlying servicing as securities, as payments, as utility, as hybrids that could convert over time. So I would see digital assets as beyond blockchain or DLT that could not necessarily be linked to blockchain. And then we have to look into the features of the specific underlying, and then we can unify it. But I believe that this ISO provided a very good taxonomy, and it is something that we're trying to also incorporate within our legislative system to make sure that we are in a good stance with other jurisdictions, and not go to the very nitty-gritty and over detail things that might not exist in the future.
Thank you very much. Before I go to Dr. Nafis, if I had to perhaps paraphrase it or try and simplify it for myself, you are basically saying it's a container where anything of value can be digitalized or digitized, and the key variables in that case would be where it derives its value from, and that's where it is real world or whether it is a token like crypto, and also how it gets traded, and finally whether it needs to be stored on a decentralized system or a centralized system. So I think once we kind of put it in these buckets of where it derives its value, how it can exchange value, and perhaps how the governance system is, because Dr. Joachim also referred to DAOs, and unfortunately we don't have time to go into DAOs because that's another topic I love discussing about. There are legal aspects, there are so many aspects, not just the community aspect. When you talk about code as law, it opens up a whole new Pandora's box, so perhaps for another time. But Dr. Nafis, anything you would like to add to it, or how do you see it?
Yeah, and definitely. I think I have to give two definitions here: what the general person will be looking at, and what the financial or economist will be looking at. So from a general perspective, anything which can be converted into digital format will be a digital asset. Even what we are talking about here, if we convert this as a video and post somewhere, it will be a digital asset. So any form of asset which can be converted into digital format will be digital asset. But unfortunately, the finance people have, allow me to use the word here, bastardized the word of digital, converting everything into a digital format. So if we look into the financial definition, if it is it's like a collection of something which we call a binary data, having some unique identifiable addresses and has certain values. So I think in a way, what we are looking here is that we are creating a separate set of asset which can be traded electronically. In fact, we have been converting every available financial asset into digital format, and that's where the challenge is, because basically it is not needed by the market. You have talked about NFT earlier. I was a big critic of NFT having no value. So if I wear the hat of economist, I will say any of these digital assets having no intrinsic value should not be traded in the market. It is just the geopolitical risk which is making these assets very much attractive in the market, and people are running or being speculative on that side. But coming back to the key question here, we should look at the technology behind digital asset. We're talking about cryptography, we're talking about the blockchain, and that is the heart of what we're talking about here. How do we utilize the technology in creating digital asset is very important. Most of the time it is being abused. We are all aware that what is the situation around cryptocurrencies or NFT. In fact, US government has started its own division under the security system, is looking only into crypto frauds or NFT fraud, for example. Before that, we have not seen such a bigger group of people looking around the fraud in a financial asset. It's more about the manipulation in the market definitely going on, but talking about the fraud around the financial asset is because of having the digital nature of it, where you can't even track where the money came from, where the money been paid to, and who is owning it. And that makes the whole system very vulnerable in that sense. So one side, we need to look into the technology behind digital asset, and second side, we look into the benefit coming out of it. So definitely digital asset is important, but it should not be abused in the way that how we are doing it. Even, for example, Douglas talk about CBDC, and I agree with Douglas. I do not see a feature of retail CBDC. It's not going to happen anytime. It may be beneficial for a wholesale banking and maybe from G2G operation, but it will never be able to solve the problem in the retail banking side. The same goes with the NFT. You know, we came up with all the hype 2-3 years ago, but look at the values. You know, look at the first tweet which created, or the monkey, the ape NFT. None of them has value anymore. So even if we create any more new digital asset in the market, we have to be trading carefully, and that is where the role of us comes into, you know, as an academic, as a researcher, or as a tech influencer, is to educate people around that. So one of the area which you talk about digital asset is to how to safeguard people, how to protect consumer behind it, because it's very easy to create any digital asset overnight, and you can start trading into the market, having no regulation, having no oversight on those type of trading. So it's an interesting space, I will say, Malik, but unfortunately, it is also a very risky space out there.
Thank you, and I love you remembering that ape. I was also trying to remember, what was it called? Board Ape Yacht Club or something, BAYC. Yes,
yeah.
and you know, if I'm not mistaken, one of them was sold for $1 million or some absurd figure. So I totally agree with you, but I find it funny today we are sitting here as experts critiquing it. Back in 2021, when I used to stand on stage and say some similar things, I remember it did not make me popular at all with the audience when I used to say NFTs have no intrinsic value, and you know, some of them would come to me afterwards and say, you don't understand the future, and these are digital collectibles. So well, you know, for all of us, time will tell how much of it is fad and how much of it is here to stay. I know time is almost up and I'm mindful of time, but I want to still address one last important question, since this is such an elite group, and I'll go to Dr. Joachim and anybody else who wants to add to it, perhaps Nafis or Douglas or even Maha, please feel free to. We've discussed quite a bit about Mika, and you also, Mika, you also articulated and elaborated on that. We heard this in the previous panel as well. So I won't really request you to go into the details of Mika, but what I would request you as an expert and economist and someone who's been involved with this, I did in the beginning of this discussion allude to the challenges that, let's say, an economic union like ASEAN faces vis-a-vis the EU, which is a much larger, but of course, in all fairness, a much older body as well. So if you had to take Mika as an example, and an example of a well thought out, well crafted, and fairly robust inter-country or supranational kind of a regulatory framework, what are the top 2 or 3 maybe takeaways or learnings you can share for, let's say, you know, a region like Southeast Asia or ASEAN, which is 10 member countries and perhaps maybe more similar culturally, if I were to say so, than the European Union? What are the, you know, if you had to make it tangible, and if you were acting as an advisor, what would you say are the 1, 2, 3 things that they could learn from Mika, and you know, how to maybe draft something similar for a region like ASEAN?
We take a very humble approach to Mika because we think it's a contribution to a regulatory discussion, but it is not a blueprint. And I think that, and I hear that from this discussion and others, you have enough experts and certainly also the demand on the market to know very well what you would like to achieve or not. A couple of very few points. First of all, we think you have to be proactive. So at the time when we were discussing that, I mentioned the ICO hype, later came then Libra. These were topics that could have been seen coming up. And at that moment in time, whether you have a mandate or not, you bring experts together to discuss the relevant issue and try to find a common language and a common narrative. The second thing I would say that you do is you limit yourself to the absolute essential thing. I'm completely in agreement with Douglas on what he said at the beginning on the various elements of regulation and the functions that it fulfills. For us, it was really that we only saw the demand for more legal certainty. We've never said that this is the complete truth, but this is something where I think put it on paper once and start a discussion process and drive the discussion forward. We were only able, as a very, very small group of regulators, not at that time having a mandate before it comes, and then with a lot of politicians still in shock about crypto, to push a liberal regulation through, because we took the momentum, we worked together with the market participants to give us arguments and use cases, and then to be in charge of that discussion. And that I think you have to do, especially with the academic space. I think we have far too few good economic research on crypto. That is why I'm going much more now into the journals, also with trying to do some in-depth research on also activating the broader, not only the economists, but also other scientific communities to take this here seriously, because it will stay, and then also to, again, drive the narrative. And the last thing is be realistic on what you can achieve. The only thing that we could achieve on MiCA really is to address those parts of the market where intermediaries fulfill functions. This is about a functional approach, and this is about intermediaries. So we had MiFID in place, which is for financial instruments. We said at the outset, crypto assets are not financial instruments. We want to treat them much more lightly. We don't have to want to put the prospectus. We want to have a white paper. We want, if you notify that to your regulator, reverse the burden of proof. So the burden of proof is on the regulator, not on you. You can already launch your project. And what is the whole purpose of countries coming together, Malik, is if you launch your project in one country in the European Union, you get a passport for 27 others plus 3 associated countries. So basically do it in one country and you can do it in 30 countries. So this is the leverage that a common market in a way can give to you, which you have in Asia as well as we have that in Europe. If you do that, you can come a very, very long way. But at the end of the day, it depends really on the implementation at the national level, because the enforcement will be on the national level. It depends on the education of the regulator in the various countries to do that. And that is where 90% of the problems lie. We solve 10% of problems through a regulation. 90% of the problems need to be solved through education and standards. And this is where at the moment we have a huge discussion. So I think there, again, a huge role to play for the scientific community, for those that understand crypto and teach it, because that's really about putting that into the minds of people through the concrete use cases. That is, as I said, a very humble approach, because so much out there that we have not regulated, so much out there in the decentralized space that we will not regulate because there are no intermediaries and we don't see the risks. But the little thing that you can do, you should do very fast in a very open way, and never think that you possess the only truth. It is just a little contribution to a global discussion.
Thank you very much. And that was a great way to conclude this amazing discussion. I think you spoke a lot about literacy and education. So I think it comes back a full circle for many of us, and Doug and I have been on panels together for many years. This is something we've been talking about for years. So we come back to that. And also, you concluded on a very interesting note, because you articulated quite rightly that MiCA is about intermediaries, and if we had another hour, I would have loved to kickstart a whole new discussion on DeFi and what would the world look like if there were no intermediaries. Then what would policies and regulations be all about? But perhaps that's a discussion for the next panel or the next discussion. We hopefully get a chance to get together. So once again, I will turn it over to our partner Robert. Thank you for collaborating with GIFT in bringing together all these experts and scholars from all over the world, and also practitioners. And from our side, we are committed to bringing more such knowledge sharing sessions, keeping our members and our viewers at the leading edge of what's happening. And we'll try and continue to give you such objective, unbiased, and current perspectives. So over to you, Robert, and thank you once again to all my panelists.
Thank you so much, Malik. Robert is unfortunately had to leave a little bit early to another meeting, but on behalf of Blockchain for Europe, once again, thanks from our side as well, and wishing everyone a lovely afternoon, evening, or morning. Bye-bye. See you next time.
Thank you. Bye-bye.